Hey YouTubers, welcome back to my channel. I had a little hiatus from uploading, but wanted to get back on top of my videos. So I thought I'd make a really good one for you today. Well, I know you're probably thinking they're all good, right? But today's video, I wanted to show you the Trading 212 platform in action. I thought I would start with a new series of videos where I invest £100 a month. And I thought I'd show you exactly what stocks that I decide to buy if I was only investing with something as little as £100. And I'll give you a little bit of my thought process on why I've chosen those stocks as well. So while you watch the intro video, why not hit the like button so that you help the YouTube algorithm to recommend this video to other people on YouTube. A lot of people I've talked to tell me that they don't have enough money to start investing, or they have various other excuses. But I guess that's just because most of the people that they do end up talking to don't actually invest in anything themselves. And of course, the number one reason for not investing is because people just feel like they don't have enough money. Now, what I want to try and get out of this video is to let you understand that not having enough money to invest is kind of like an old mindset, and that it's not really the case anymore. As these days, you can invest with anything as little as £1. And I think everybody who watches this video can scrape up at least £100 really easily. And most of you can definitely be able to scrape up a lot more than this. I hope by using £100 today, it will make sure everyone watching feels like it's something that is actually really achievable. Now, before I start looking at the traditional method of investing in the stock market, I would like to address a more important factor, and that's investing in yourself. Because if you do not have the necessary investments in yourself first, you will not have much success in the stock market. So here are a few points. So number one, always, this is the first thing that anyone must always do whenever they seem to have some extra cash in their life. And this is to pay off any existing debt. Because for instance, if you have any outstanding loans or credit card debts, the typical credit card interest rate can be anything up to about 27%. Therefore, paying off that debt is going to be the best investment that you can do, as you won't be able to get any other guaranteed returns that will earn you more than how much you will end up paying in interest fees on your current debt. Now, number two, this is a rainy day savings. This is something everyone should aim to achieve, as we live in such an unknown world, especially during this current pandemic that we're going through. There are people who are losing their jobs. There are people who haven't been able to go to work and earn a full income. And just in general, if anything goes wrong, such as you get a leak inside your house or your car breaks down, you should always have this rainy day savings that you can just go into straight away and be able to pay for important things that you may need on a day-to-day basis. Now, this is something that's really important, to save up enough money to cover you for a significant period of time, just in case you are one of those unfortunate ones who has lost their job during this whole COVID pandemic. Or for instance, you just feel like you want to make a change in your life, and so you may need to take some time out of work to find that next step for you to move on to. But for whatever reason that your normal salary can't cover your regular outgoing expenditures, this is why you need a rainy day savings. Now, lots of people out there say different things. Some say that you should have 3 months saved up of your salary, some say 6 months, some say even a year, some say more than that. But what's important at the end of the day is that you're prepared for a number of months that you can comfortably cover your expenditures. And I guess this is why these people out there do say to save up certain number of months of your salary in order to have it as a rainy day fund, because it is the easiest way of quantifying how much you need. But for instance, if you want to be a bit more specific, you can do what I do and write down all of your total expenditures for a month, and then multiply it by the number of months that you wish to have saved up. Now, the best thing about this rainy day fund is that you'll always have peace of mind that for however months that you've saved up, you'll be prepared to use it whenever you really need it during that time period. And then number three, investing in yourself. Now, education is so important. And I'm not talking about the education you get in school. I'm talking more about the street business education. Now, I made a video a few weeks ago about the 4 books that changed my life. And I put a link to that video up there. Now, buying information books is one of the greatest investments you can do, as you can pick up these books usually for less than £10, and the knowledge that you can get from it can make you so much more money, therefore providing you with the best return of investment that you'll ever be able to get. Now, on top of this, there's also courses that you can buy in order to learn something new or to further help enhance your knowledge on a specific topic. But once you've done all of these 3 things that I've mentioned, that's only when I would start considering the world of stock investing. Now, as always, I'm not a financial advisor, so I would never push you to actually listen to anything I say. But I am just letting you know the process that I take when I'm making my financial decisions. And I always recommend that you seek professional financial advice before making any investment decisions. Now, investing in the stock market is obviously something that I've talked about many times before in previous videos. In one of the previous videos, I mentioned how I usually invest the money that I choose to put it into the stock market, and I usually make a split of my capital into 3 separate parts. Number 1, I invest in index funds and ETFs. The reason for this is because it's a quick, easy way to invest in lots of high-performing companies without having to actually buy stocks in each individual company. This is because an investment fund has already taken care of all of the hard work for you and has put together an index fund or an ETF. Now, what's great about this is that you can reap the benefits of multiple companies, which ends up costing you significantly less to buy shares in an index or an ETF, rather than buying shares in all of the individual companies that makes up the index fund or ETF. Now, I've added a link to a video I made about index funds up here. Now, number 2, I like investing in dividend stocks. Now, the main reason for this is because one day I'd love to have enough money invested so that I can just live off dividends. Because quite frankly, out of everything I've seen in the business world, dividends is truly the only method that I can think of that is actually passive income. But arguably, in order to get to that position, I need to invest a lot of money into dividend stocks. So it's going to take me a few years to get to that point. Now, number 3, the final way that I like to invest is investing in individual specific companies that I've researched myself and that I find are really interesting. Therefore, with this £100, I intend to show you directly on Trading 212 what stocks I would buy if I only had this £100 to invest with right now. So first things first, if you don't have a Trading 212 account, head over to www.saiganesh.co.uk/trading 212. And this will take you to my referral page, where then you can open up your own account and you can get a free stock worth up to £100. I've also put the link down below in the description. Now, once you've created your account, when you log in, what you would see is something like this. Now, as you can see on the online version of Trading 212, for a beginner trader like myself, this just looks really confusing. Now, this is why I personally prefer the mobile UI for Trading 212, as it's a lot more user-friendly for a beginner to understand what is going on when you are trading. So, when you're in the Trading 212 app, as you can see here at the top, I've already funded my account with £100. I actually did £101. Don't know why, just did. Now, this is a trading ISA account. And so, like I mentioned earlier, I'm going to be breaking down this £100 into 3 fairly equal amounts. Now, the reason why it's so easy to trade like this now is because apps like Trading 212 allow you to buy fractional shares. So you don't need to have, for instance, $1,651 in order to buy any shares in Tesla. You could buy £33.33 worth of shares in Tesla and you'll get a fraction off a share. Now, like I mentioned, the first thing that I invest in is always ETFs or indexes, because being a beginner investor, I always use the advice from some of the greatest investors out there, such as Warren Buffett. And he always says the best thing to invest in for someone who doesn't know the markets very well is something like S&P 500 or the FTSE 100. So if we scroll at the top here, we can go and see ETFs, and then we can see a list of different ETFs that we can invest in. And for instance, here you can see Vanguard S&P 500 ETF, Vanguard's FTSE 100, then we've got various other ETFs here as well. So let's have a look at Vanguard S&P 500. We can see that it's currently trading at £48.95 per share. Now we can see in this graph here, on a daily basis it's decreased in value a little bit, but if we look at it over say a week, you can see that it's gone up 0.66%. Over a month, it's gone up a little bit of 0.79%. But if we look at it over the last year, it's made a 9.63% increase in the last year. And in total, since it started back in 2015, it's made a 98.98% increase from its original value. Now, similarly, we can search for another ETF that watches the S&P 500, and this will be the iShares Core S&P 500. Now we can see here with the iShares S&P 500, the value currently sits at £25.69, and since its inception, it's had a 202% increase. Now this is because the iShares S&P 500 ETF started a few years before the Vanguard S&P 500 ETF. Therefore, it's seen a larger increase. Now between the two, Vanguard S&P 500 and iShares Core S&P 500, I would personally choose the iShares purely because it's a lower value than the Vanguard version. So I can actually hold a full share with our 33.3 pence invested within the iShares. Now in order to buy this share, we click on buy, and then we've got the option to choose either to buy by the number of units or to choose a specific value. So for instance, we wanted to buy £33.33 worth of this, which is approximately 1.297 units of this share. So for instance here, I'm quite happy with this. So I'll be happy to spend that much money to get that many number of shares in iShares Core S&P 500. So then I'll click on review order, and then I'll send my buy order. Now this will be sent over to actually make the purchase when the markets open. Now the second area that I invest in are dividend stocks. Now when it comes to dividend stocks, I strongly suggest that you go and do your own due diligence. Now I've obviously done a video about dividend investing, and I'll put a link to it in the top right hand corner, but it always makes sense to do your own research and own due diligence before selecting or choosing any stocks that you're going to buy. But for this demo purpose, I'm going to go and search for BP. BP is obviously a petroleum company. Now, when we search for a specific company, we can see various different details about that company within the app itself. We get a high overview of the company details. Then we find out the CEO, employees, blah, 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 general information. What's interesting after this are the key metrics that we're looking at here. So the market capitalization of the company is £63.1 billion, and its profit to earnings ratio is 5.65. Its revenue is £213.36 billion, and the most important value that we're looking at is a dividend yield in this instance, where it's 9.36, which is a very healthy dividend yield. Now looking at BP, we can see this in this last year, they've reduced in value a lot, which in some instance shows that they're at a bargain price right now. We can buy stocks within the company at £2.92. But if we look at the max lifetime of this company, we can see they did have during the end of 2015, 2016 kind of time, but it then went up again just before the COVID pandemic. Now it's currently sitting at a discounted value. Therefore, I kind of feel that BP has the opportunity to build back its current stock value to what it was before the pandemic. But on top of that, they do have a very healthy dividend yield. And therefore, I'll be interested in buying £33.33 worth of BP stock as part of my £100. So if we go to buy and then we choose to do a specific value, we can then type in again £33.33, and that's going to give me about 11.33 shares of BP. And once again, if I review order and send the buy order, this is now going to buy £33.33 worth of BP when the stock market opens again. And now finally, a company that I find interesting. So being a tech geek myself, I love some of these tech companies such as the Teslas, Apple, Amazon, Facebook, Google, etc. Now right now, Tesla's all over the headlines. They're doing really well. They've done immensely well in the last year. Now I made another video that's coming out later this week regarding the stock split that's happening with Tesla and Apple. And so therefore I'm going to choose one of these two. Now obviously with the £33.33, I'm not going to be able to buy a full share of either of these companies. However, I'm also quite interested to see what will happen if I buy a fraction of one of these and then the stock split happens at the end of the month, how that will affect me in trading 2-on-2. So I'm going to select Apple. Now Apple of course has been an amazing company recently, and in the last year, even with the whole pandemic etc, they've managed to almost double their market capitalization, and they're definitely on track to become a $2 trillion company. On top of that, they do also pay out a dividend. Even though it's quite a low percentage, it's still passive income. So if I click on buy, and then once again I choose at £33.33. So by buying £33.33 worth of Apple, I'm going to get just under 1% of a share in Apple. So if I review my order and then send my buy order, this is now a pending order that will get executed when the markets reopen again. So there we have it, the £100 that I've invested today in Apple, BP and iShares S&P 500. Once the markets open, the actual order will go through and then I'll see what the actual value is, and it will automatically update and let me know if it's gone up or down. So we'll look into this again probably in September, where I'll invest another £100 and we'll continue this series of videos. So that's it for today. I hope you enjoyed today's video, and as always, if you are planning to take any advice that I've given you today in investing, please make sure that you seek some professional advice before investing into anything. But something you don't need advice for is hitting that subscribe button down below. And make sure you hit the bell button as well so you get notified when my next video comes out. And as always, remember to like, share and comment so you help the YouTube algorithm to recommend this video to other people on YouTube. I'll see you all again on my next video. Bye.